This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Dustin.
Well, hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today is Wednesday, January the 15th, 2025. So glad you could join us. Coming up a little later on in the program, we'll talk with Ross Baldwin of agmarket.net to find out how the market's closed up for the day. But right now, we're going to talk with Dr. Glynn Tonsor of the National Pork Board and the work he's doing to help educate our producers to understand how supply and demand works. Talking right now with Glynn Tonsor of the National Pork Board out of Manhattan, Kansas. Thanks so much for taking the time to visit with us today.
Oh, my pleasure, Dustin.
I know, and you're a professor of economics there at K-State, and obviously economics right now in agriculture is a big deal. Why don't you tell us a little bit about what's going on from the meat side of it, pork industry, what kind of things we need to be knowing about?
Yeah, most of our listeners are more familiar with the supply side of the meat and livestock industry, how many hogs we have in the industry and so forth. One of my jobs is to help translate that, but also to remind folks that that's only half of the equation. If you don't understand what consumers are buying, why they're buying, or at times why they're not buying your products, then we can't really, totally tell the whole economic story. So I spend a lot of my time at Kansas State in the Ag Econ department, as you said, trying to track and understand the nature of meat demand. And that's my engagement for the most part with the National Pork Board. And,
for those that maybe weren't as aware of what happens after the hogs and have left their farm, they sure got a crash course during COVID as to what happened. And so let's talk a little bit about what's going on. What are the things that you're talking to consumers about, and what kind of things are you talking about that they need to understand?
Yeah, so you brought up the COVID one. I'll use that as an example. It was sort of a reminder. This has always been the case, but it was a reminder is, barrels and gilts leave the hog farm in, I'll call it fixed proportions. So we get ham, we get loin, we get bacon products. We get a lot of products off each one of those animals, but they're not consumed in equal proportions. My household would consume a lot more bacon than sausage, for example. There's other households that don't eat any ham. There's some that eat a lot of ham, right? So that variation across our large population, over 300 million people in the U.S., and pork gets consumed in a pretty non-uniform way, is what I'm trying to impress on people, was reminded to us during COVID, because some of those products have more value added and additional processing than others. And the workforce disruptions in running our facilities kind of reminded that. And we saw some pretty abnormal price relationships is what came from that. So in the heart of the pandemic, that was one of the things I spent a lot of my time on, was trying to explain, and what some probably thought was justify these price movements. And at the end of the day, it was a relationship between non-uniform consumption by consumers and fairly uniform fixed supply coming from the live animal.
All right, so obviously past pandemic, those things have kind of gotten back to, I won't say as normal as they're going to get, but as we're getting ready to go into 2025, what are the things that consumers and also producers need to know about?
Yeah, so, we're a year and a half past what we might call peak inflation. So, to peg this, I'm 44 years old. There's a large part of our population that had not experienced 8-9% inflation until recently. And that had a, massive impact on household budgets and their, what I call financial sentiment, how comfortable they are with their finances. And for the last 2 years, tracking that and who is more optimistic or who is more pessimistic about their finances has made a big impact on who's had stronger pork demand or weaker pork demand. Why am I giving you that to you as we wrap this up here in November of 2024? There's some reasons for optimism that we're ending 2024, looking into 2025, with the public becoming a little bit more optimistic. Inflation, at least at the moment, is a little lower. Wages are still rising, so some buying power is improving. And hopefully we see that spill over into stronger meat demand in general, and we're mainly talking pork today, pork demand in particular.
It's interesting, you're talking about meat and demand. Let's just pull away from the pork and look at the whole scope. Cattle has been performing better than anyone expected. People have been talking, the consumer demand has not dropped, even in the heart of the inflation. Where are we seeing, is it consumers prioritizing, boy, I can't get the word out today, prioritizing what they want? We just came back from pandemic where people started to learn how to cook at home again and do all that. Was it taking that knowledge and making it work to try to save budgets, or was it about the fact of this is where we want to put that priority?
Some of all the above.
Okay.
Back to my large country, a lot of variation, right? You brought up the at-home part. We definitely had a shift away from food service to at-home early in the pandemic, sort of forced when restaurants were closed, right? There's some households that stayed that way because they're more comfortable cooking at home, like you said. There's others that have stayed that way for financial reasons because all else equal, the meal is cheaper if I'll prepare it myself at home versus out at a restaurant. And I'm interjecting that because that is a multi-species. It's not just a beef or a pork kind of point. Is those that are most concerned with their finances actually have continued to have low foot traffic through restaurants. So we're seeing stronger retail meat demand and at times weaker food service meat demand because of that. I'm cautiously optimistic that as we go into 2025, the restaurant scene will improve a little bit if the public gets more comfortable with their finances.
So what kind of markers are you looking for, indicators as you're going to kind of look at milestones along this progression that you're talking about for 25?
So one of the things in the meat demand monitor, which is the project based at Kansas State, the beef and pork checkoff both fund. It's a large survey project. Folks can Google it and find more on it if they're not familiar. Is we actually ask people how your finances compare today versus a year ago. Are they better, the same, or worse? And in October of 2024, which is the most recent data I have to quote at the moment, 21% said their finances are better than a year ago, which means 79% say they're either the same or worse. I'm watching that. There's been some slow improvement in that measure the last few months. I'm, again, cautiously optimistic we're going to see some ongoing slow improvement. So that would be the one metric I'm going to watch. And what we see as that improves, people consume more meat the prior day and they pay up and they do value-added kind of purchasing. So that's the demand pull that we were alluding to earlier. That's what I'm watching for, the kind of the metric to track.
One thing we've also noticed in the past couple of years is folks that are looking into, we obviously are looking online and getting more information, recipes and things like that. And people have put focus on different cuts of meat than we were used to, the pork chops, the ribeyes, the ribs, all that. Now they've started to go to like the flank steaks, the pork tenderloins, the things that we didn't always use much or doing more with the cuts you have. I mean, is that putting a lot of more pressure, or not shouldn't say pressure, but putting more support into that meat market as well?
More support, also a challenge because now you have, more of these decisions are made cut level, as we talked about earlier. I'll interject ground pork. Ground pork is something that's talked about a lot more today than it was 5 years ago. But not everybody in the U.S. consumes ground pork, period, much less in equal proportions and has the same desire, right? So QR codes on your iPhone, right, and resources behind that to give you kind of a menu of how to do it are increasingly important. My opinion, for a moment, is cooking knowledge is very diverse in our country as well. Younger generations are less comfortable just kind of winging it, all else equal. But if you have something with a QR code and they pull it up and follow it as the first experience, they're way more comfortable. So the industry increasingly knows that. That's kind of a lesson learned coming out of the pandemic as they were cooking at home. But that's much more cut level is the point I'd say. It's not just a generic, this is how you prepare pork. This is how you prepare ground pork. This is what you do with a pork chop and so forth. Those resources are out there and the industry is pretty good about getting that in front of consumers that seek them out.
Now, we talked in the beginning, you talked about, the different things. People are consuming, some consume more bacon, some consume more ham. It varies, place to place, and that's across all the meat sectors. I mean, is there any shift that you're seeing, maybe not just in pork, but was focused in pork, but also look at those, a shift to different cuts that are becoming more and more widely used or accepted?
The shift I would actually say is the lack of a shift, which I don't want to confuse your listeners, is a lot of people expect us to shift from beef to pork as beef gets more expensive, or from beef to chicken as beef gets more expensive. And we're actually seeing less of that than we might have anticipated, back to your earlier question. And the reason I'm interjecting it is, I think people make a cut-by-cut decision, not aggregate, right? And if you're not comfortable, I usually use roast as an example. You could walk into a grocery store and buy a beef roast or a pork roast, and my mother would have been sort of equally comfortable and knowledgeable cooking either one. So if there's a big price change in one or the other, that would nudge her one way or the other. I don't think that describes the typical person working in the grocery store anymore. They're not equally knowledgeable or aware of both, and therefore they're less willing to substitute just because the price is different. So I think there's less of these shifts than we tend to think. Rather, there's persistence. Once I find a recipe or a menu I like, I stick with it. So go back to my ground pork example. If I've experienced ground pork somewhere, maybe at a restaurant once, I'm comfortable with it. Maybe I use it now in my tacos. I become pretty persistent in that. Maybe I'll spice it a little different, so forth. But I kind of stay with that rather than shifting a lot.
So we talked a lot about the consumer trends, the marketing trends, things like that. Iowa, obviously the biggest producer of pork in the country. What do our producers need to know going forward with this information we talked about today?
So this, you produce in equal proportions, we consume in very different, is important to monitor. Most of your producer listeners will be well aware of the cutout. So it's reported by the USDA. There's primal level. So there's a belly primal, there's a loin primal. That's the wholesale measure of the relative value of that part of the animal you can learn a lot by watching basically the prices of reported daily and weekly there on, is belly demand strength ahead of loin, because the relative supply is very similar because they're coming in fixed proportions. So I hope that take-home message follows. The other one is just like simple awareness that the pork checkoff along with the beef checkoff is nearing 5 years of support of this project called the Meat Demand Monitor, and everything from that, because it is checkoff funded, is freely available on our Key State website, agmanager.info. And if what we've shared today is of interest to you, you probably don't need it every day because it'll make you fall asleep, but you're welcome to pull it up. It's there for you, and I hope you find that valuable.
All right, Glynn Tonsor was our guest here today, economics professor at K-State University. Thanks so much for taking the time to visit.
My pleasure.
That again was Dr. Glynn Tonsor of Kansas State University, working on behalf of the National Pork Board. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll run down the closing markets. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. We're back here on Ag Matters PM from the Iowa Agribusiness Radio Network, and time to run down the closing markets. Right now we're being joined by Ross Baldwin of agmarket.net. And Ross, what did we see in those grain markets today?
It was a mixed day of trade across the grain markets. Corn, it continued its strength that it's had here recently, with the nearby markets being bull spread. March corn led the way today. It was 4 1/4 higher. The back months, they were anywhere from, if you go really far out onto the back end of the curve, they were really unchanged. Whereas like December corn was 3/4 of a penny higher. Over in the soybean markets, they were also bull spread here today, but they had some losses. March soybeans were a nickel lower. The new crop November contract, it was around 10 cents lower at 10.39 is where it traded. And the wheat market, it was pretty quiet for the most part. Chicago wheat nearby March was a penny higher. The back months, they were just unchanged to a little lower, and Kansas City wheat was 2 to 3 lower.
All right. So anything really major we see coming up? I know we got through the WASDE report. I know planting's a little ways off. Is it just mostly South American weather we're watching right now?
That is the key driver here moving forward, just especially over the next 2 to 3 weeks as it relates to the soybean market. Soybeans obviously got that friendly shot of news in the WASDE report here last Friday, but for the most part, it's all about what the weather's going to be. Weather has been a concern over the last couple of weeks, especially in Argentina, but that the forecasts have gotten a little bit better, more favorable here just in the last few days with some rain returning. And you can see that today with soybeans taking a little bit of premium out. The thing with the soybean market is it's absolutely going to be weather driven. The soybean complex or the soybean market, it did get that friendly shot of news where the USDA lowered the soybean carryout roughly 90 million bushels. But at the end of the day, South America is going to be key, and that crop is still going to be big, especially in Brazil. So from a world standpoint, the world still has plenty of soybeans. But I do think with the managed money crowd really piling into the long side on corn like they have, there's estimates that we're going to see in the COT report this Friday that they're long over 300,000 contracts of corn. They're just getting out of being short soybeans here. So I do think corn has a friendly story, especially the old crop. Now the new crop's a different story when you get farther down the road for the planting intentions, but that's not till the end of March. The old crop corn picture does have a friendly story, but the funds are big long. My bias is over the next few weeks that we see the funds stand in here and defend this big position that they built into, which will continue to support corn. If that happens, I'm hard pressed to think that you break soybeans too hard as they're just getting out of this short soybean position. My bias there would be that they stay relatively flat, if not maybe go long just a little bit of soybeans to where soybeans have decent support here. But in the big picture, the thing for producers to be mindful of, especially on old crop beans, there's still plenty of beans in the world.
All right, then moving over to livestock, what did we see coming out of those cattle and hogs today?
It was another extremely strong day across the protein markets, especially cattle. Cattle continue to trade up here near record all-time highs. The February contract was $1.12 higher at $198.52 today. The deferred months were really $1.25 to $1.30 higher. Most of these contracts are sitting right near their contract highs, which for the most part are all-time highs. The April contract is the highest one on the board for live cattle. It settled the day at 199.32. The high that it got up to is 199.70. I got to think that April's really trying to gun for that $2 level on the board. You do have cash trade in the north that's been last week was it was around 203 to 205. There's been some early trade here this week that's fully steady with last week. There's been some reports of some 205 in the north and some 201 down in the south, both that are fully steady with last week's highs. Feeder cattle market was $1 to $1.60 higher. Feeders just continue to remain extremely strong. The feeder index it is strong, leads the way. It's the last print on that index was 278.31. The January contract is the highest month for feeder cattle, and it ended the day just around 275.22. So it's still got a little bit of a discount to that index. That continues to support this feeder market is how strong cash feeders are. The thing to keep in mind with the live cattle market is there and feeder cattle market is there is no shortage of bullish news being priced in. It seems that everywhere you look, it's bullish, and the funds are expressing that in a big way. The commitment of traders report that we got to see, it was on Monday. It was delayed from last week. So as of last Tuesday, the managed money crowd was record long feeder cattle. It was just that position was just a little under 25,000 contracts of length. That took out the previous all-time record long position that they made back in February of 2012. So it took almost 13 years to take out that record position, and here we are. The funds are record long feeder cattle. They're not record long live cattle. There were about 10,000 contracts off of the all-time record long that was made back in 2019. My bias is come this Friday, we likely see the funds long somewhere around 150,000 contracts of live cattle. The all-time record is 155. So we're getting up here at some major levels. It's no question. Cash is all-time high. Futures are all-time highs. The funds are record long feeders, nearly record long fats. So while everything is bullish and the fundamentals are bullish, I still encourage producers to be managing risk on anything that they're buying, because at these levels and with this fund position, it doesn't take a whole lot of negative news or just bad news to where the funds want to cover. And it's a small door, especially in feeder cattle and live cattle, to where they want to start exiting. It's hard for them to get out without causing a lot of negative prices in a quick way.
All right, and then on the hog side of things, anything really materialize there?
Not really. Hogs, it was a fairly quiet day. February hogs were down 50 cents, but April hogs were up 52 cents, and the back months were 40 to 60 higher for the most part. The hog market remains strong. I mean, we had a good size sell off here, a $10 to $11 sell off recently. After the funds went record long hogs here in the month of December, I believe they made that record long, late November, December. And hogs, they had just more of a technical correction than anything else. The funds are still holding a hefty position in the hog market. But they had the sell off. We've had a nice recovery down here, and hogs look good. I think hogs have a friendly story to where the supply hog numbers were tighter in 24. There's estimates that production does pick back up here in 25, but for right now, hogs numbers have been tighter and it's been friendly for hogs. I do think probably one of the most bullish things that hogs got going for them is the price of cattle. And if the funds are going to stand in here and be record long feeders and work on maybe going record long live cattle, I think you see them stand in here and defend this big hog long that they got. But there again, I mean, it's just there's a lot of bullish news being priced into this protein complex when you combine these positions between live cattle, hogs, and feeder cattle. These are some of the largest long positions that they've ever held on record across the three combined. So just be mindful of where we're at and where these positions are at, because it doesn't take much, even in the hog market, similar to live cattle and feeder cattle, that you can start to get some nasty reversals when the managed money crowd wants to exit these big long positions that they have.
All right. Well, Ross, if folks want to talk about some market strategies and things they need to be thinking about, what's the best way for them to get in touch with agmarket.net?
You can reach me at our office here in Anthem. Our number is 712-373-3276, or you can visit agmarket.net to find any of the ag market brokers.
All right. Well, Ross Baldwin, thank you so much for the insight, and we'll talk to you again real soon.
Thanks for having me.
That again was Ross Baldwin of agmarket.net. Let's go ahead and take a look at the closing market numbers on the Iowa Agribusiness Radio Network market screen. March corn was up 4 1/4 at 478 3/4. Soybeans were down 4 3/4 at 1042 3/4. Soybean meal down $3.80 at 302 even. Soy oil up a nickel at 46.27. Chicago wheat up 3/4 at 547 even. Kansas wheat down 3 1/4 at 557 1/2. Minneapolis spring wheat down 1 3/4 at press time at 587 3/4. Oats down 4 1/2 at 349 3/4. Live cattle were up $1.12 at 198.52. Feeders up $1.12 at 275.22. Lean hogs were down 50 cents at 83.12. Pork cutouts up $1.45 at 91.32. Class 3 milk up a penny at 20.28. And that's been a check of our closing markets, and that brings us to the end of today's show. You can find all our content online at iowaagnet.com, as well as find replays of our Iowa Ag Matters program, Pods of Potential, and all our other podcasts, as well as our market podcast, which come to your mobile device free of charge 3 times a day at iowaagnet.com. From the IARN studios in Des Moines, I'm Dustin Huffman. For Riley Smith, Andy Peterson, and Mark Magnuson, we thank you for watching. This has been Ag Matters PM.